Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by and visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap Order Flow tools with auction market theory using a volume profile in the intraday developing time frame. Thanks for stopping by. I'm going to start going with a higher time frame overview. What I'm going to be showing you was posted Sunday morning. This is so you can see an integration of how the market works in multiple time frames, or as I think of them, as fractals. So please grab a pen and a piece of paper. I'm going to be going over some interesting things. Also, remember this stream is available exclusively to Bookmap Discord Trader Lab participants for 24 hours for review, and also that the Bookmap Discord Trader Lab community is a no-cost community made up of traders with all different experiences and time in the business, from newer to substantially experienced. And you're all welcome to visit the Trader Lab. There's a link in the bottom of YouTube if you're interested in that, and it may help you on your journey. The Trader Lab is a serious community. It's about the business of trading. If you don't understand this business, you might be kind of pushing the rock up the wrong hill. So that is what it is. It's about building out trade plans, only trading when you have a statistical edge, and managing your emotional states and learning about them so you understand the obstacles that we all face in this business. And it is a business, and it certainly is not a video game, in my opinion. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Remember, grab a pen and paper. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's see if we can do this effectively. I'm going to try to switch a few things around here. Okay, maybe. All right, this is, I posted this in the Trader Lab. I hope you can see it okay. And what these are, this is called a composite chart. Now, I don't have everything on here, only what I believed was relevant and important. This is the last 3 days, and this is called a micro composite. All it is taking 3 RTH days, the last 3, and drawing a volume profile over them. Now, why might we do that? It's because this is the latest interaction between buyers and sellers. And what we notice here is that tails on these last 2 days, even though it's been two-sided trade, that the sellers seem to have the edge. Now, here's another piece, and I'm just going to do this briefly. If you're interested in what this is all about, you can come to Trader Lab and certainly learn about these things. Friday's low was right here, and this is called a micro-composite variable high volume node. What high volume represents is the accepted price, and as we go up in time frame or fractals, the volume, think of it like Russian dolls. And I always kind of think about, we think about time frames. I kind of think of them similar probably to you guys, except I see it in fractals, not in time. Now, the RTH is obviously time-based, but the thing about it is, if we're looking at the purpose of the market, which is based on volume, which is to find what's too high and what's too low. And here's another thing, write this down. The market goes up to go down, and the market goes down to go up. The market goes up to go down, and the market goes down to go up. So what is that all about? What it is when you have sellers who seem to be in control, the market has a tendency, underlined, to take those sellers out potentially, and then when the weak hands are out, to continue the direction of the potential developing trend. And of course, developing trend is always like, well, what's my time frame? So what's your quote trend? Well, if we have a big picture, then we might be able to then trade inside it if we see alignment. So let me tell you what this is. This was the retail price for these 2 days. In other words, the highest volume. When we put in Friday's volume, this price moved higher. So what it was saying, based on Friday, or the 2 days previous to Friday, this was too low, and it was the low of the day. Coincidence, I always say, but there's a reason these things happen. And in the auction, if you, instead of being indicator-based, if we understand that it's volume-based, and our indicators are fine, but they're really what our indicators are doing, are measuring the past and hoping to somehow give us an indication, that's what they call them, indicators, of what's going to happen. Well, I don't know what's going to happen. So what I do is look at what happened in the sense of volume, not something crossing over or some random measurement. I know what happened here. I don't know what will happen. So if this is the new retail price, what do we know about up here? Buy stops, and here's something you'll find interesting. 55.34, write this down. That was too high. The price above there was about 55, 48, 49, too high. These targets are on the map before these, so these levels are on the price map before this gets here. We tested this, we sold off, too high. We came under here, too high. Where are our stops above these swings? Too high. Fuel. I call this fuel. In other words, buy stops. This is the VPOC migration retail price. So now this sets us up. And we have a target down here. I just want you to make a note of it. It's not a recommendation. This price was too low from Friday. So this is Friday's low. If we get under here, our next target, and make a note, 54.65. And why is this important? Because this was the highest volume on this day. And in this day, this was where the retail price is. And remember, the auction is a shopping experience. It's not a predictive experience. In the higher time frame, this was too low on Friday. So if I get under there, this is my next target. If I get under here, I can come down out here. Anyway, I hope you find this helpful. And there's more targets below. 54.26, 54.19. Not necessarily now, ever, never, just they're on the price map. Now let's go take a look at Bookmap. And I'm going to show you the levels on Bookmap very briefly, and then we can go from there. Now let's put this back together. Yesterday's low, remember? Micro composite variable high volume node. That was Friday's low right there. Underneath it is 65. That's an open target if we take out yesterday's low. Now, but here's what I really think is interesting. If you notice in the ETH, where did we go? 55.35. Now, when I saw this, I was pretty bullish. I said, well, this thing is really, looks like it's going higher. We're over yesterday's high, Friday's high. Okay. And we hit this. But if you look at the ETH, we sold off and came across the range. Now, where did this overnight high? I'm going to come back briefly. I have to show you these things so you understand. 55.34, right there. I don't have a pointer. 34. So what was the ETH high? This is auction market theory. And the thing about it is, if you can kind of think of the market a little differently, 34 was there. Okay, there's that's a level. Doesn't mean anything other than it had behavior and we come up and it's too high and we sell off. So once that happens, it kind of sets up in my brain, if we don't come back here, and considering we came across the range, it is going to favor the downside. And that would be settlement, ETH low, yesterday's low, if we get there, and 65. So right there, my brain is now going, okay, we have over a 90% probability, past performance not indicative of future results, of taking out either the ETH high or low. Considering we got out yesterday's high, we came to a level, etc., it sets up the potential to come across, take out the ETH low, get the settlement. Now, there's other little joys in here I'm going to share with you. Anyway, does that make sense, guys? Hope it's making sense. So and remember, guys, please give a thumb up if you're in YouTube, and if you're interested in the Trader Lab and understanding how the market works, why it does what it does, and how at times you can get in alignment with it. Vetting structured trades. There's 60 PDFs available to you if you're interested in understanding the business side of trading, that it's a statistically based business. So let's go a little further. Here's some statistics. Write a couple of notes down. Now, I gave you some targets. So what we did is we opened higher inside of yesterday's range. RTH open is here. There's yesterday's high, so in range, and the settlement is below us. So it's higher inside of yesterday's range. Statistically, our highest probability statistic is the overnight volume point of control. Now, past performance, not indicative of future results. You have to vet everything for yourself. There's approximately an 82% probability we're going to get here. That's lovely. There's a 69% probability we'll get here. You're going to find all these things lovely. The previous point of control, a 67% probability, it's down there, that we're going to get there. Now, the thing about this is the statistics favor the upside. However, we know what happened. The statistics are only based on where we open. They're not based on something called context. And context is key, because you need to know what happened here. And that it isn't just that we just rotated down, it's that we rejected this and we came back inside the range. And not only that, but we came all the way across. You know, it was quite a sell-off. So it was pretty dramatic, and it kind of surprised me. By the way, being surprised is not any big deal in trading. I think we're surprised almost all the time, you know. And the thing in trading is not to be predictive, but to anticipate. So based on this, we anticipate. We do not predict. Now, if you have the Holy Grail and the crystal ball, come on over, visit Trader Lab, share us. So this has an 82% probability. So let's take a look. I'm going to show you the first trades. Now, remember, this is a dynamic process. It is not a predictive one. And I'm going to show you structured trades. Now, there's no magic in anything. By the way, protective stops are there to protect you. They're not there to validate your intelligence. Neither are any one trade. This is a gaming business. So what happens in this business is random. We can't predict anything. At least I can't. If you can, you know, that's wonderful. Me, not so much. So this is the RTH open right here. So let's take a look at this. So the market opens. What do we anticipate? Well, considering where we're opening, and I have the overnight volume point of control above me, I can anticipate a couple of things. I know the market was selling off after hitting my target, so I have kind of a negative lean, but I have to be more conscious of an 82% probability. So my thought is, who takes control? And then I want to align with the control. But I always tell in Trader Lab, don't trade the open. And the thing about the open is it's very fast. So it's very easy, if you don't have really good discipline and execution, that you're going to be taking an outsized risk. So I just go, don't do it. And it's just a recommendation. Everybody does their own thing in Trader Lab. Some traders are going to trade this. Others are just going to study it. It's the speed. This is 2 seconds in, you see. So that's one of the problems with this. However, you can see how the market works in Microstructure, and I'm going to be narrating Microstructure. This is called, so what happens here is we get our RTH open. This is an auction. You got a buyer, you got a seller, you got a buyer up here, going to the moon. What do I see? Icebergs. Now, this is not an actionable structure. Right here, you see the buyer was met by the iceberg. You see the sellers, and either we get above these guys or hasta la vista. Well, we break. So this is, and I call this a variable high volume node. I'm going to take you through a process. Now, I take my time here because if you can understand market mechanics, and you can see it in all fractals and time frames, you might be able to stay in alignment with it. So I have my sellers in control. I have this at the moment is too high. This is what it says. This is a micro consolidation. Sellers take over, too high. This is what consolidations are. But I'm doing this in a microstructure. So let's take a look. Too low, I come back here. Too high. Let's watch. I'm going to label it. These are micro time frames. So let's just track it together. And then I'm going to speed up and try to get into real time. Well, there's a lot going on here, but I'm going to show you structured trades. I'm going to try to concentrate on that today. So this is a variable high volume node. What does this tell us? This is too low right here. I'm going to mark it. This in the when the market opens, this is called the developing volume point of control, and it's a volume profile term, and all it is where's the volume. And if you think about, and I don't use indicators, at least in the sense that most retail traders do. What I do is I'm tracking the volume. And let's look at what we see. I see aggressive sellers here. I have sellers here. And then what do I have here? Nada. I see a buyer here. Now, right here, the volume point of control shifts up and we break low. If I can't get back above this, and this is VWAP, then it's a potential short here. Let's just see what it does. That's a structured trade. Oh, where are we going here? So that was the first short structured trade, Trader Lab. Now, let's go into more microstructure here. Here's how you might read this. So I'm going to move in a few different dimensions here, and let me know if you're going to get, if this is useful. This was, let's come back to this structured entry. So VWAP, VPOC, this is alignment. The break low and this is really right here too high. This is retail. I break low, I come back. VWAP, too high. Variable high volume node. No buyers up here, sellers in control. A little buyer action there. Hey, anybody? No, thanks. We'll see you later. So this is a short. This is a short in Trader Lab. Stop is up here. Once we break down, watch. Buyers take a shot here. No bueno. They're still below these sellers. Order flow. Seller, break low. Buyers take a shot here. This buyer's underwater. And by the way, I'm only showing you the larger strokes in the delta. There's buyers and sellers everywhere. What makes up delta? Market orders and stops that become market orders. So when I'm seeing the delta, I just want to remind you, I'm only seeing 2 stops over here. Huh, where's my buyers? Well, this is too high. What about over here? Do I get above this? No, too high. My sellers are below. So if I'm managing the trade, and this is just an idea, not a recommendation, what do I know? This microstructure, too high. This over here, too high. Going south of the border. This over here, I have a buyer absorbing right here. The seller, what happens? We get below. This buyer is consumed, and that buyer right here, this absorption was a buy iceberg. See you later. Thanks for playing. This is when your broker sends you a gift basket. High volume here, microstructure, too high. Just follow. If you have questions, please post them. Microstructure, where's my buyer? This is my last buyer. Too high, break low. Bounce here. What do I got? Nada. Seller. Buyer tries here. How we doing, Lewis? Not looking so good, Tom. Okay. Down here. Buyers try here. Now I see a selling iceberg, which takes the other side. So I'm just going to show you. Now, when I'm showing you trade management, it is a subject to how you vet it. Just going to try to draw you a little something here to show you some structure. VPOC migration. Okay, let's watch this. So this is resistance. This is resistance. Actually, I'm going to take this off of here. That was for here. Let's look at this one. I just want you to see structure. Very important. So our buyer is here. They got stuffed. I get my buyers are here. We come back. Right there is the high volume node. Let's just look at it. Buyers absorb here. Sellers are below. Now, there's a couple different ways you can do this. This is material. This VPOC migration is material. This is resistance. Right here, this is microstructure. Going to open it up for you. Now, what I do is I'm watching the delta, because here's what's happening. When you have a buyer and you don't, and it's delta, aggressor, and it doesn't go anywhere, what that is showing us is that there's a passive participant. That's what the limit order book is. They're passive. They're not, hey, I'll wait for you. You know, I'm in no hurry. These guys are in a hurry. Now, they could be buy stops. That's part of it, you know, and aggressors. So whatever. Seller was here. Okay. The seller was here, absorbed the buyers. The seller is here. The buyers absorbed him. The buyers are here, and we get sellers below. The sellers absorbed him. So you're kind of, the way I think about it is when I see the aggressor, what's happening? I see the aggressor here, and I have the sellers in control back here. So I'm going to look over here, and then I'm going to look over here. If these guys take this out, then there's a bit of a trouble, as you might say. So here I have my sellers. My buyers got absorbed here. Resistance is here. Does that make sense? I come back. I'm not taking it out. So the microstructure is here. I'm not going to draw all these lines, but I want you to see the sellers take control. I come back up here. There's nothing going on here. My micro high volume is here. I break. I come back here. My buyers are here. So I see my buyer, the antenna goes up, but that's all it is. I'm just going, what's going on here? It's a buying iceberg absorbing. I have my sellers here going to zero, right? What do I get? Let's watch right here. I get my sellers going to zero. Buyers are above. This is interesting. I come back here. My sellers were here. There was a buyer here, and they were absorbed by the seller. When I see the seller below the buyer, which is the green absorption and the iceberg, because that's what's creating this, and I'm below here, then the sellers were in control. Okay? And here, the buyers are active again. I have a buyer here, and what am I looking for? Continuation down. I'm in the micro now. I'm just showing you an idea. So right here, this guy was absorbed. Here, the sellers were in control. This is resistance, and now this is support. Micro, high volume structure is right in here. Sellers were in control in this consolidation. I come up, VPOC migration. This potentially suggests lower. So I'm going to label it. And if you have questions, post them. I can't see them at the moment, but I'm going to do my best. Now, the behavior around these high volume areas is very important. How are we doing in YouTube? Please give a thumb up if you're finding this interesting. Okay. So VPOC migration. What this is saying, and this is a language of the market, in the fractals and the microstructure, this little high volume is too high. Right there. I think we'll not mess with this maybe. Oh, there you go. So this is the microstructure. The buyers were here, nada. Sellers took over. Buyers came in here. They got nailed. Come down below, going to zero. And then what? I see a buyer here above this guy. So this is right now they are absorbed. Buyers absorb this seller. So I know right here is something of interest, okay? If I draw a line over here, which I am, just to keep it interesting, let's see what happens. See? So this is the new retail price. This is the highest developing volume for the day. Right here, now this is a bit different than most of you are probably used to, you know. I'm going to show this to you because this, if this is resistance in a developing higher time frame, this is support in a microstructure. So here, I come back here and I break below it. Buyers on the hook here. Remember, buyers on the hook up here. I break high, I pull back, I break high. So this guy was absorbed. That's what I know. I know the sellers are in charge over here. This is micro, okay? I'm down in fractals. It might be a little too intense for you. But the buyers are absorbed here. With this shifting down, I'm looking for, you know, continuation down. So here's what I see. Sellers are here. Buyers are here. My buyers are here. So this is too high. My buyers are here. And if I go lower, it is too high. I should say, you know, my sellers are here, my sellers are here. So the idea is if you see the buy delta and there's no movement, there's a limit size. So I meant to say my sellers are here. Basically, my buyers are there and my sellers are here. They're absorbing. I break down here. This is my support. So I'm looking for this to break the support. Right here, what do I see? I don't see my sellers. In fact, this was absorbed, and don't forget this was my buyer. Buyers are above this. This is support. That's what I know. So I see my buyers again. I see my buyers again. This was absorbed. Right here it breaks. It sets up a long for me. My stop is under here. Now I was actually looking at it in here also because of that and this. I hope that makes sense. So that set up a long. Now, what I was doing is, so I took this. The idea was to get back to VWAP. Now, and I got a scale here. And then I'm holding it. I'm saying as well, if I come down and I get absorption again between here and here, I can now come up and squeeze because this might be too low. Let's see what it does. My stop's under here, right? I get taken out. Now, let's watch. So I'm going, that was nice. So right here, I have my sellers. sellers. So I'm kind of right here. I'm a bit perplexed. So I know I have stops now back here. Let's watch. So I have my sellers down here going to 0 again. I have target here, I have a target here, and I have a target there. I also have, it's only 836, and I am looking for downside. However, the market is now short. So let's try this again. So I'm looking at this. I got my sellers. This is micro. These are not trade recommendations. What I'm doing probably is, it's just the way I do my thing. Not saying it's good. I have no idea. So right here, these guys are on the hook and they get absorbed. Some iceberg action, sell stops coming out, including me. This breaks above here, comes above here, pulls back. This sets up a long scale here, and I'm going for the overnight volume point of control somewhere. This. That's my trade. Target here. Okay, 82% probability. Now, there's a couple other ways to get into this. When we come up to here, what is that? Resistance. That is, if you're in TraderLab, that is a potential scale or target. If you pull back to here, that is support. VPOC migration. This is a structured trade in TraderLab. It's a long. So what do we have? This might not be your thing. If you got long here, then you are looking for this because this was too high. Think of the logic. I'm not paying that. New retail price. What happens if it's too low? Where do we come back? Let's check what was too high. Support and resistance, different concept. Break here. This right here is, you can see it as resistance or support. It's all up to you. Resistance. So support, resistance, support, resistance. Break here. Variable high volume node. Next level of resistance. All these are on the price map. Here, going to the moon, Alice. Pull back. What do? VPOC migration, structured trade, long. Long. To where? To here. See the symmetry. Scale. Hold on. Stop here. VPOC migration. Pull back. Long. TraderLab structured trade. Where do we have to scale? Right there, which is there. See the symmetry. Where am I going? Here. Target. And that was that one. Okay. Right there. Are you guys tracking? That was the long sequence. Are you guys with me? Give me a thumb up. Give me a question. Give me a, hey, how are you today? How we doing in YouTube? You guys getting some from this? Remember, there is a, give me a thumb up where it's down in the bottom, because that helps the stream. Where it's, they got the little thumbs down there. Yeah, thank you. This is trading in fractals and auction market theory. It is based on how the market works. I don't use any indicators. Now, this is an 82% probability, and past performance not indicative of future results. But aren't we what? Bearish-ish. Why? ETH high hit our target. Now, if this didn't happen in the ETH, I would be trading towards it. And that's what I showed you at the top of the stream. And remember, if you're in TraderLab, you should review this stream It's available at no cost, and so is the Trader Lab community. And if you're visiting in YouTube, you can always hang out and visit. Let's try this. So now let's take a look at some stuff here. Now, I'm going to try to get around a little quicker here. What I'm showing you here is market mechanics. And it's not about, let me just see if I can get this correct here. Predicting anything. I can't predict anything. What I can do is understand what creates behavior and then try alignment. Right here, so this is the target coming up. So for me, I'm not saying I'm not giving recommendations. I know if I have an 82% probability, and I also know that my ETH high hit my target, upside target, or one of them for the day, then I know this is where I want to go. I'm not interested in what happens above, and I'm kind of, as you know, white knuckling the desk that will get here. And my exit is right ahead of this. So you saw my longs, and those are all Trader Lab structured trades. If you're in Trader Lab, you would reverse engineer these. These are part of the structured trades that are in the 60 PDFs I share that you can all download. There's no cost to visit Trader Lab or join the community. Remember, though, it's a serious community. It's about the business of trading. It's not a romper room, and it's a professional environment. So that's why we're there, and that's why it exists. Let's take a look at what this represents here. I'm going to try to do this. This is what's called a micro high volume node, this little node sticking out. And what creates these behaviors, just so you know, is the interaction of the participants. Now, nobody has, as they say, a monopoly on anything in this business. It's just maybe. And that's all you got. So let's take a look at this behavior and see what happened here. So this is a auction or a consolidation. So right here, I have my sellers. What's above here? Where's my buyers? Nothing yet. I have a buyer here. They are absorbed. I break under this microstructure. So this is a consolidation. You all know what consolidations are. And what a consolidation is interaction between two participants. But here's what we know. Now, we don't know what it's going to do. So let's not think about that, because that's not part of trading. We only can identify what it might do. So the fact is 82% probability. So can it keep going? Yeah, we could take out yesterday's high. There's a probability we're going to do that. So this is part of the joy. And also at 9 a.m., if we take out the first 30 minutes high, and this is Central Standard Time, there's also a good probability we're going to take out the first hour's high. So this is a very, call it statistically tenuous location to be thinking about anything. But let's watch the behavior. That's what I want to share with you. So I'm thinking, I'm out and I'm going, I got to be, we could still take out yesterday's high and then go south, right? Why not? You ask. And I go, yeah, right. So, but this is what I know. I'm seeing seller here, absorption of the buyers. I have exhaustion here, and I had sellers here. I come back, nothing going on. I got my buyers here, sellers. I got my buyers here. I got my buyers here, sellers. So I'm looking at this, and I'm thinking, I'm going to tell you what happens to me. And this is just the way it is for me. And there's no, gee whiz, somehow I'm immune to what you feel. I have the same emotions and conflicts because trading is uncertain at every moment. And when you're dealing with this business, uncertainty is is sitting on your shoulder, and your psychological wiring, I call it Hyde, Jekyll and Hyde. Hyde is the voice in your head that's constantly speaking to you. If you don't have other voice in your head, then maybe I ought to go see somebody. But it's the fear, and it's the uncertainty that triggers the emotions. The emotions are primal, and they're there to protect you from danger. It cannot differentiate from the, danger out on the savannah with the saber-toothed tiger or danger here. It is the same response. Be careful. What's behind that tree? Do I hear a tiger? That kind of stuff. So you're listening for it. You're anticipating it. So I'm anticipating. My fear is anticipating this. Okay? And understand, this is what we all feel. Now, if you're immune to that, then, you're very fortunate, because our wiring supersedes our intentionality, and we have to recognize it. So if I'm in a fear state, but I have good reason, and that is this has a high probability at 9:30, and yesterday's high in this configuration. I want to just give you the statistics so you know why I'd be vacillating here. About a 55% probability. So it's 50-50, but look how close I am, you see? So that's a bit of a problem. So let's watch. So this is think of it as support and resistance, okay? And what is this? This was my retail price. If it turns out this is too high, which I won't know, I can come up, tag this, come back inside, and I would have a short. I'm looking, and this has me conflicted. So let's look at what happens here. Right here, I break low. This is my resistance. Let's look at the structure right here. So right here is my outside structure. This is a low volume node. If I get below here, then this consolidation or all this interaction is too high. We fall out right here. So right here, I know I want to be short. So I have to find a way into this thing. Now, this is my outside edge. So right here, now this might not be your trade, okay? Right here, I have my sellers take over. I know now these guys were absorbed. I cannot sell this because of conflict, not for any other reason. I break below this. It's saying is, yeah, we checked the price. We're not going to pay that. Thanks for shopping. And now I break here. So I have an option. This is microstructure right here. I'm going to draw a little line on here so you can see it. I'm drawing the lines to help you see this. I don't do that while I'm actually trading because I just look at it and I see it. This would be an aggressive entry. If you don't have an entry for it, then you got nothing to do. Look where we come back, where the sellers took over. So that's a potential short right here. I'm going to draw you a little box for it. Should be drawing more of this stuff, but I'll be spending half my life here, so I don't want to do that. I just want to show you structure. So this is too high. This is outlining the consolidation right here. So what this is a micro auction in a fractal. The sellers were here. Sellers are here. Buyers, not so much. Break, sellers in control. Pull back here. For me, getting back here or here is a good location for a short. This is an aggressive short. You would come here. What's down here? Variable high volume node. Support. This is too high. What else is it? Variable high volume node. Outside edge up here. This is all profile, and it is, if you don't understand it, it's a story of interaction between the participants. That's all it is, and it's always developing. So the idea of using this is to try to stay in alignment with it. So I have what? I got my buyers here, my sellers are here. My sellers are here, my sellers are here. There's absorption over here. I was looking at that. These can be longs if you're a short-term trader from here to there, or just from here into the VWAP in the mid to squeeze out the shorts. We would get mid and VWAP sellers here. VPOC migration, too low, pushes it up into this. I'm under the overnight volume point of control, and I have what's called a low volume. In other words, we're not paying that. We're going to see you later. So we're not paying that. We're not paying this. And now we're not paying this. Let's watch. So where do I come? I check here. I see my sellers. This is now the new retail price. This is too low. I'm going to label it. Just watch. What I do with these variable high volume nodes is the auction is an ongoing discovery of what are participants willing to pay. High volume represents where the buyers and seller did a lot of interaction. So this was fair. If we leave it, it's saying at the moment it might be too low. So the market has a tendency to come back to other locations wherever, and this was the last location here that it was too high. And then we broke away. Here it becomes too low and we break away. Then we come back to where it was right here, too high, and up in here, too high. Now, no precision. I see the buyers right here and I see the seller here. If I can't get above this and this, then it's a short. You could sell this. Your stop could be here or above here. Then where are we going? Back here. It was too low. This is in fractals. So this is a developing daily time frame. This is microstructure. Where do I come? Notice the behavior. That's a scale. Then what? I pull back. If this is now too high, this is too high, this is too high, and I can't get back up here, and I get below here, what is this? South of the border. I have a statistic open down here. I also have the IB stat, over 90% probability I'll get here, and yesterday's settlement, got to find it, statistically, I'm losing it. 69% probability, and this, the previous point of control, 67% probability. So once the overnight volume point of control was too high, I turned the barge around and I aim for statistics, which are here, 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 and there, I think. And then there's more. This and this and this. These are our targets. Remember, it's top of the stream, 65. Let's see where we are. I think, and there's more. You go, really? Yeah, there's more. We have a couple. We have the IB trades. Before I go into the IB trades, which are structured trades, questions, and thanks for your patience. And if you're in YouTube, at the bottom of YouTube, there is a thumb up thing. Please hit that one down in the bottom. It helps the stream, lets me know you're getting value from this. Okay, questions, post them in YouTube. Let's go take a look now. Now we have a couple trades in YouTube. Now here's the thing to keep in mind. These are targets. This, well, hold on a second here. 54. Hold on, guys. I got to check a chart. Make sure this is right. Yes. This is the high volume in the intermediate time frame. And the 65 is below us. So that's still our target. It's not a trade recommendation. Anything can happen. It's not our job to predict. So let's mark some of this here. So this is our variable high volume node. Okay. So we have at 9:30 the initial balance. There's two possible trades right here. One is called the IBF or IB failure. It is a mean reversion trade. Now, here's what's interesting. 70% probability-ish, I think it was, to get, 67% probability to get there. 67% at 9:30 to get here, which we did, I think. hold on. No, that's wrong. IB low. 58% probability. And 69% probability to get here. So these are high value targets. This is the first hour. Now we have another trade. There's two trades in here. There's one, what's called the IB continuation trade. That's a short. And the other one is a mean reversion trade, which would come back here. Actually, it would come back there, there, and then potentially squeeze and out to maybe here. Let me label this. I haven't seen it, so I'm just going to mark it. Who knows? So I took the long, and there's part of my brain is going, what are you doing that for? You want to be short. Yeah, but I got my high value targets, and I know the market is short. So part of what I have found, at least for me, in the trading thing, is to always be thinking, if everybody gets short, remember, write this down. The market goes up to go down. The market goes down to go up. So even though we might be looking for lower targets, you have choices. Let me give you the choice. If you're short, you could be out of your trade here on the shorts. Right here. These are targets coming down, okay? And you'd be done. Now, right here, you have a choice, the IB. You could either be looking at this to take a short, and if you did, you would take a stop, or when you see us come through, it becomes a long, and it's a mean reversion trade, and that's the mean, and you're coming back here to squeeze these guys out. And you have to be conscious that you got the VWAP in the mid, and that this was too high. I'm just going to move this down. Now, the thing with these VHVNs, I move them around because the market is auctioning. That means these price points change. So in my own trading, what I'm doing is I'm looking at this stuff, and if something gets stale, I move it because it tells me what happened here. So I know right now, since this is down here is the current retail price, and if this is too low, checking this. This is left over from Friday. It's a naked volume point of control, and it's called naked because we haven't checked it yet. And the auction is all about what's too high, what's too low, and it's dynamic. So this was the retail price from Friday, and let's go back to the logic. You'll love this, or maybe not, but I hope you do because I do. This was too high in the higher time frame, and that's our ETH high. This was the high volume or retail price. Same thing from the last auction, which was the ETH. We checked it too high. What was too low? This. So what's my possibility? Check this one. Check this. Check this. Do you see the logic? Now what? If this is too low at the moment, and I see my buyer, I'm now going to put a little line in here for you. I'm hoping you're getting, something from this approach. And what I'm doing is I'm only tracking the behavior. I have no clue. Please don't think this is predictive. Not so much. So right here, chop, chop, chop. When the market consolidates, what it's telling you is it's a moment of rest and indecision. So what it does is the market, like here, this is a short here, right? There's your chop, 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 chop. It's a consolidation. You break away from it. This is a structured trade in TraderLab. There's trades all over the place if this is your thing. I'm just going to show you. Going to show you this. There's a lot. Now, this is day trading, right? Now, here's the other part about this. What is your time frame that you trade in? You could be trading all of these rotations, or you could be in a broader stroke and just use the higher time frame ones, if you will, or fractals. This is the thing about TraderLab. Every trader finds their own groove. So let's look. This is the IB. We have two possibilities, a short here if you took a short here, you'd take a stop. That's life in the fast lane. Once right here would be your short, right there. If you don't get below this volume and this buyer, there's trouble. Why? These sellers were absorbed. There's seller, seller, buyer. So right here is contested. I can see that. My buyers, right, are activated here. This is too high. There was a seller here. There's the iceberg, absorbed. Support and resistance. Sellers are here. Looking good, Lewis, going to zero. But my buyer is here and here. They were absorbed. So I got the fight between this and this. Sellers absorbed. Okay. Buyers above. Buyers come in. This buyer was absorbed. This is order flow. So I'm taking you down now to see the consolidation and how you read it. So what I know is I've got like a sandbox here. I've got the buyers over here and I've got the sellers up here. So right here, I see the seller. So it's a fight. A consolidation is like two armies squaring off across a trench, and they're lobbing things at each other, right? And one side is going to break. Who's going to retreat? Well, the trend's down. What? 69%. About 70%. We've hit our targets. So this either says continuation down or mean reversion. That's what you got. So right here, I break here. So the guys who are selling in here are now going to get squeezed. I get my break high. This sets up a long. It's the IBF. And we're going here and here. Watch. Scale. VPOC migration. Too high. Now, watch. I got stops here. And right here is now support. This is resistance. So support is right here. We had resistance over here. So that's why this is a target. So if you got long over here, and I took this one to here, and then I'm looking to see how far back might we come. I got stops at VWAP and mid, and let's come back. And I have this variable high volume node. Variable high volume node. Sellers were in control here. So I have VWAP, and I'm above VPOC, and I have this open below, and I have this open below and yesterday's low. So these are all targets. So this was a counter trend trade or a mean reversion trade. I come to the VWAP. I come to my level, variable high volume node. I have this microstructure up here. I can't put all the lines in, but right here I see, what do I see coming up? I see my buyers and I see the sellers absorbing. The alert is on in my brain. I'm going, and that's why this is a target. Now I chop here and I know right here, I got my sellers, I got my sellers, and I have my VWAP. I also know there's stops at VWAP, and we might anticipate icebergs too. So, and I'm thinking if we get up to the mid, that's all great. Right here, I see my buyers. I have my location right here. I break below it. I come back and check it. This is a short. Stop is here. And then you're going here. Now, you're going to find this fun, and then I'm going to come up and look at your questions. So right here is the IB, and this is now a low volume node. I'm going to label it. And what low volume nodes are, and you'll see the one above, so you know what I'm doing with them. All they are doing is showing me the outside edges of what's called distributions. So this is too high, and this is too low. When I get below it, again, and I can't get back inside or leave this. This is now the current fair price, and this is now too high. So I'm going to use the fractal, and you can kind of see it, right? there, right there, and it's in alignment with this. Okay. So if this becomes too low, I come back and check what's too high. If this is too high, I come back to too low. If I get below too low, then I go south of the border. And what else? This is the outside edge, and this is a structured trade and trader lab. So we had the long side of the structured trade, the IBF, which is mean reversion. We did it. We come back to here, which is the IB. You would actually be able to scale here or here, wherever you want to scale. I would suggest, or I don't suggest, I'm saying is structured trade would be you take the short up there, you scale, your next target is this. In case this is too low, you break below it, you pull back here. This is an IB continuation trade. It's a structured trade. Let's look at it. See it? So right here, you can see the micro volume. I'm going to draw you a little line, and you can see it's right here. The buyers came in here. They're getting assaulted by the icebergs. They got absorbed right there. I break. It sets up right here is the IB continuation trade. I counter rotate. Now my support is over here, don't forget. So I come back here. I have no buyers above this guy. I get another iceberg. This sets up a short. You didn't get it there. You get here. Your stop is over here. You got tagged here. If it happens to be, I just put the trade back on, other than some words. And the other part is, you would be scaling. So it's a matter of entry I always go for wherever my stop is. I want to be risk neutral. If I don't get my risk off, I take a stop. I just put the trade on again right here. And now I'm going to this. So that's life in the fast lane. I see absorption. Let's watch a lot of absorption now. This might suggest counter rotation. Let's watch it. What do I get here? Micro high volume. I'm now under this distribution. I'm going to label it low volume node. We'll just see what happens, okay? All I do is try to stay in alignment. Do you have questions? Post them. I'm going to come up for some oxygen here. So low volume node. Let's look at the microstructure. Let's look together. Right here, overnight low volume node. So I have my buyers. This suggests to me this is a lot of absorption. There's 1,700 icebergs, iceberg detector stops and all that. Very useful for me. I see the absorption. So I see the sellers and I see the buyers interacting. And there's a lot of buying here. If I see a lot of buying, it might set up a counter rotation. So I'm going to be looking to see how far, and let's assume right here, we don't know. Okay. So right here, I take this out. I'm coming down. Let's just watch it now. Don't know. I'm clueless, naturally. I'm seeing my buyers. This is too high. I have a low volume node here developing. I have micro high volume here. This little micro high volume structure had the buyers. This little micro high volume structure has the buyers. So but they have the buyers, but it's too high. This is too high. And I have my buyers. So let's just watch. Too high. Low volume outside edge. Buyers are here. Buyers are here. I got all these buyers in here. Micro high volume right there. Let's watch it. This is your high volume. Here's your test. Sellers. So I got sellers. Buyers were absorbed here. These guys were absorbed. I have a buyer here. I see selling icebergs. Sellers in charge. I get a buyer here. This is my microstructure. I'm looking for a continuation short. Could come up here. We don't know. This sets up a potential short. And if you, again, where's the high volume? It's here. Let me show it to you. Now, when this is all going on, I'm as clueless as everybody. What I do is I look at the high volume because I know this is the consolidation. I don't know what's going to happen. So once I get the chop going, then I'm going to look at where am I? What does it say? It's a language. I'm seeing the buyers absorbed here. So I see my sellers take over and I pull back. Where do I come back? To my high volume, which was created in here. More or less like this. So when I break out, I pull back to the volume. This sets up a short. Your stop would be here. These are not trade recommendations. I'm just trying to show you. What do I get here? A buyer, okay, and buys stops. So there's sellers here, and I'm coming back to a location. Just watch. This sets up another short here against this actually. So there you go. Chop, chop. Back here. Stop would be up here. I see my seller. This guy was absorbed. I come back and test. No bueno. It's a short if you can execute in this kind of structure. It takes a lot of practice, intentional practice. You'd be scaled, who knows, right? So let's look at trade management. So I see my seller looking good, Lewis. Going to zero, right? Now, no way to know. So here, micro high volume, there it is. I'm going to put a line on here for you. I'm going to try to get caught up, but I want you to see a way to potentially use these structures. Seller, there's my buyers. Once they're above the sellers, then that suggests maybe trouble. Micro high volume, if you look to the right, you see the little node there. So I got high volume here, resistance. I have my sellers here going down to nothing. My buyers come in here. Once I get above this guy and here, then I know my buyers might be taking control. I have my sellers were here and here. I have my sellers here. I have a buyer. This right here, that little node that's sticking out right there. This is important. So if this guy, we can't get above this buyer, then the sellers can take over and stuff these guys. And this is where the buyers are activated. Let's just see. Seller is here. Buyer is here. So this is right here, the shootout at the OK corral. This trade will be over. Okay? Right here was, keep your eye on it. This was your last area where the sellers were still in control. So, that might be more than you want to risk. Then let's go a little further. Suppose this is resistance. Why? Support, break high, resistance, we're under it. You can go to something like this. Now you're going to get taken out of trades that go further, you see. Let's look at where we come back here. See the alignment? Break high. So, and now let's look at the alignment of this structure here. See? You can break this down. I can't spend time on it, guys, but if you are part of the Trader Lab or you visit Trader Lab, you can have access to these streams and you can educate yourself in market mechanics. How does the market work? Why does it do what it does? Great question, isn't it? Where are we? Oh, this is very interesting. Two-sided trade, huh? Okay, hold on, guys, and I'll be looking at your questions. High volume node. Buyers here, sellers absorbed. Buyers take over. Seller, seller, seller here. You cannot if you get long, it does not make sense to put your stop here because the sellers can come down here. And then if they get absorbed, you see what happens. The buyers are here. We have a seller here. He gets absorbed. So this guy was absorbed. This was absorbed also. And the buyers took over here. This guy was absorbed also. So if you're getting long, you really got to be out here, you know. Seller. So this is the fight. You see it? This is your resistance right here. This here. Volume. You got long here. You're looking to scale and then wherever the stops are. So, and I haven't seen this, but right here is where your stop, you would have your stops above here. And this is your high volume. So I'm going to put a line here just so we have it as a reference, okay? See what I'm saying here? So if you get long, you need to look over here and see what was too high. And I haven't seen this. So I just put the line over there, comes down here, becomes a long. Then I know this is the last auction in a fractal. Think Russian dolls. They're happening inside of each other. This is what you guys think of time frames, you know? So this is a target. So if you get long, it's a target for a scale. What is this? Support. Let's go see what it does. Oh, there you go. Questions, and I'll take a look now. Thanks. And remember, if you're in YouTube, I'd appreciate a thumb up in the down below. It gives you a thumb up location. Thumbs are good, helps the stream. And remember, if you're interested in the Bookmap Discard Trader Lab community, there's no cost for you guys to visit the Trader Lab. It is a no-cost community. Also, there's a lot of additional education available to all of you. Stocks, options, crypto, order flow with a high tier tool like Bookmap, which helps you see inside price. I don't use time base because time has nothing to do with this. It really has to do with the participant behavior. That's a micro high volume structure. I'm going to put a little line here also just to keep it interesting. So you can see there's volume here, here, and these are fractals. This little volume that happened, and you could see it right there, is the same as the higher time frame. So subject to your thing. Now, when I say your thing, your time frame, I find, at least for me, I use these as targets for scaling or entries, but I'm always looking at the range because my risk is about 2.5 points. You know, if the wind's blowing the right way, I might enter a little better, but it's 2 to 3. And if I'm going to risk 2 to 3, I don't, 5 points, well, maybe not, depending if I have outsized targets. But the thing is, I like the trade for the larger swings. By the way, we're still below the overnight volume point of control right here. What does that tell us in the auction planet? Too high, maybe. So if I come up here and I find too high in the microstructure, I'm below this, it's possible that I'm still going to go south of the border or not. It's not my job. So this, if we're outside, we might get here. But first, what do we have? The IB high. What does that set up? If we're crossing both sides of the range, that is potentially setting up something called a neutral day. And a neutral day, there's about a 30% probability. What is a neutral day? And what you've noticed the past couple days is both sides are battling. I mean, this is really like push one side, pushes the other. They take the stops, then the other side. So this is going both ways. So what that sets up is a context called mean reversion. This was too high, but there's buy stops here. So what can happen? If I come out here, I can squeeze the shorts out, and that sets up this target. If I come out here, and it doesn't have to, I can then do the IBF from this side, and the goal would be to come back here. Not a trade recommendation because everything is subject to. In other words, you'd have to see structure, absorption, and like every trade we put on, the outcome is and will continue to be random. Now, is this a safe, a good high? I don't know. I do know this was our target. Now, we can go above it naturally, part of the joyousness, and that would put 40. If we come out here, we're looking at 40. If we only come up here and come back in, we're looking for this. These are structured trades. None of them are trade recommendations. The thing about trading, if you're using a structured trade process, you can anticipate your trades, and then you need some kind of triggering structure that's in alignment with the locations. Thanks for your patience, guys. Are you guys with me? If you have questions, post them. You're in YouTube. Thanks for visiting. Hope you're getting something from this. This is auction market theory, how the market works in its purest form. It's built on top of a chassis called the volume profile. It's not complicated. Matter of fact, it may look complicated because most of us in the retail space build our process with lagging indicators. And all an indicator is an output of price, right? Or a derivative of price. This is the volume at price, which is what really counts, in my opinion, because this is shopping. And if you go to store, retail price, and these are all micro structures where the shoppers interact. If this is like your store down the street, you know, the little one, there's not a lot of volume, but there's still buyers and sellers. And if the price of an S&P becomes too high and I run out of buyers, like there, and I break below it, that suggests too high. That actually sets up a potential short. Now, I'm only talking microstructure. These are not trade recommendations. If you can understand it, this is where the order flow comes in. So right here is a potential. It's going to suggest maybe a downside rotation if we don't get above these sellers, which were over here. So we'll see what it does. And again, I'm not calling trades. I'm just showing you what happened here. Because here, the buyers were absorbed by the sellers. The buyers are here. The sellers took over. The buyers come back here. The sellers are over here. What happens over here? If these guys can't get over here and here, then potentially this. Let's just see if it does it. And remember, I don't use indicators. And I used to, believe me, I used them like everybody else. And when I started in the business in 1980, indicators were a new thing. So that was really pretty cool. Thought the Holy Grail had showed up. And then it was the right mix of indicators and timeframes. Does this sound familiar, by the way? Can my indicator tell me what's happening here and why we might get a downside rotation or something more meaningful? It's not a predictor. It's an order flow in alignment with this is, for me, really where the rubber meets the road. Now, remember, we can take this out. So I have a plan for this. But in the meantime, if my plan suggests I could short this or nothing, how about this? Suppose I'm long and I see this behavior. Might I get out of my long? Or do I take a short? You can use this any way you want. What I am doing is real time. I mean, I don't know what's going to happen. That's every moment. Remember how the casinos operate. You know, They're in a random, uncertain environment. That's what messes with our psychology so much. Messes with me at every moment because I'm continually triggered psychologically by my fear. Oh, yes. Just because I'm doing this almost 45 years doesn't mean the triggers aren't happening. I just recognize them and I put them in a place where I do my best to manage them. So I see it, I anticipate it, I experience it, and it has nothing to do with trade. It has to do with fight and flight and, oh, saber-toothed tiger, danger, out of here. Reptilian brain, not, which is the conscious or intellect, if you want to call it, consciousness, intentionality is built on top of this reptilian brain. You cannot do anything. You can't disconnect it. I tried. Believe me, years. I used to use a rubber band on my wrist because when I'd have the thought, I would snap the rubber band. I was trying behavior modification, but I don't think behavior modification is going to work on the reptilian brain. I really don't know. It didn't work for me. And I was actually thinking of upgrading to a cattle prod, but didn't go there. Instead, I said, well, this doesn't work. So after going, those big rubber bands you get if you get the mail? So I was collecting those. Went through a lot of them. Notice where we come. See, so this is fractals. How you want to use these is up to you. By the way, if you're in YouTube, again, please, the thumb up down at the bottom, very helpful, shows me you're getting value from this. There's a link in the bottom of YouTube. You can come to Bookmap Discord Trader Lab community. There's no cost to become part of this community. It's a serious community. It's for building out a career or the business of trading. And while past performance is never indicative of future results, and your mileage may vary, many traders who come to Trader Lab have, enhanced their understanding of how the market works. Have gone from not being successful to, let's just say, more success. Others have moved on to funded accounts and have become profitable. I'm not saying that'll happen for you. Because there's a lot of pieces to this. What it really takes is a commitment, to me, in my opinion, to say, I'm going to learn a business, I'm going to become a specialist. The other part of this is think like a retail trader. Don't do what they do. Most retail traders do the same thing. Most retail traders do not have longevity in the business. You can actually take your experiences and what you've learned and think about why they don't work consistently. I call it Trader Groundhog Day, and that is where random behaviors, everything works, by the way. You throw a dart at the board, you flip a coin, buy or sell, and some of those are going to win. So we think maybe there's a viable process, right? Because we see everything work sometimes. I know what I did. I went down this path of I'm just going to make it better. If it only worked better, and I'd see it work at times. So you spend a few years doing that. With a random mix of indicators, time frames, all the standard stuff we've all done at some point in our careers. And then you have to decide, are you waking up in the same place? How many aha moments have you had and then only to be disappointed because it really is random and there's no edge? Well, the business of trading is built on edge, just like Las Vegas and the casinos only play games that have statistical edge. They accept the random outcome, but they don't interact with the gamblers with random inputs. They have anchored inputs. And if you haven't watched my primer webinar, it's in the library of webinars that are available to everyone in the Bookmap Discord Trader Lab community. And don't forget, there's if you're a Bookmap subscriber, by the way, don't forget this if you haven't done it. There's the Bookmap Academy where you can get mentoring and coaching on order flow and, critiques and, things to help you move your process along, and a lot of additional education. It's all available at no cost. When it comes to Bookmap, I have to tell you, I've never seen a firm more interested in the development of traders. I mean, it's good for everybody. If you can learn to trade, it's good for Bookmap. So Bookmap is making an investment in you by having all these streamers and all this diverse education, stocks, options, crypto, order flow, algorithmic behavior, market maker behavior, swing trading. And by the way, what you're seeing here, this process, this is generic in the sense this is how markets work. Markets do not work on a backwards-looking indicator, which is like Google Translate. If you can get into this real time and understand why, do you know why this might be a long or cover this short? Do you know why? If I know why, do you know why we might come out here if we get above this, squeeze out the shorts, and then come back down, which would set up return here? This is what the Trader Lab is all about. Please give the thumb up in YouTube. Click the link if you want to visit the YouTube, the Trader Lab community. Like to meet you guys. And if you come to Trader Lab, remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and compare to what you did. Now, here's the other part about Trader Lab. We have all different kinds of traders in Trader Lab, trading different instruments, NQ, crude, gold, whatever. Primarily, I focus on ES because I think it's a very good product for developing traders. And it's really about understanding process. Trading is process driven, in my opinion. So you know what to do, not what will happen. What it says, language, remember? What does this say? This was too high. And what does this say? This is too low. Too low, too high. Too low, too high. Now, I'm not saying you should trade it, but you know what? If you can interpret it, you have something that retail traders don't have. And that is an understanding of the market mechanics with order flow and overlaying it on a chassis of auction principles, which is the fundamental basis of how the market works. If you can do that, I think it might give you a competitive advantage over other retail traders who are just doing what we've all done. With the results that, as you know, statistically, retail traders don't have sustainability in the business. They have randomness, and the P&L goes up and down, up and down, up and down. Gamblers, up and down, up and down, up and down. The casinos, also up and down, up and down. But how do casinos experience when the gamblers walk out with cash? It's overhead and cost of production. How do you experience stops? Do you go break even the next time? When you're taking the next trade, are you thinking about the loss you just took? Are you projecting into the future the pain that you will experience, even though it hasn't happened yet, which triggers your emotional states, fight and flight? Do you understand those mechanics? Trader Lab does. You can learn about all of this in the Bookmap Discord Trader Lab community. Click the link in the bottom of YouTube. And on the way out, be sure to give a thumb up down there at the bottom. This stream again is available, and if you come to the Bookmap Discord Trader Lab community with that link in the bottom of YouTube, access the library of webinars. Start with the primer ones. It's got about 30,000 views. Remember, I'm not a vendor. There's no specific course. This is a group effort. The Trader Lab community is a no-nonsense, build a business community. And while everybody's results may vary, it does take work. You want to have a business, and I think there's no better business than this one. You have to decide if you'd rather invest your time than just gamble. Just an opinion, and everybody's mileage may vary. Please give that thumb up on the way out. I appreciate you guys visiting the Trader Lab, and I look forward to seeing you guys tomorrow. Thanks again.